All right, let's get into chapter 3. Just did some eye drops. I'm not crying, I promise. This was not an emotional chapter. I'm just kidding. All right, chapter 3 study guide. Taking responsibility. I think this is huge. I think everyone should go read Extreme Ownership by Jocko. I talked about it in the last video. I think it's a great book, and I think we all should take extreme ownership of our trading. We don't blame the strategy. We don't blame other things. We don't blame external sources. We don't blame the market. We just take extreme ownership of each individual decision. And yeah. Okay. So in chapter 3, Mark Douglas emphasizes that taking complete responsibility for your trades and outcomes is the foundation of trading success. Most traders unconsciously blame the market, other traders, bad luck when they lose because they can't handle that ego, right? But this mindset prevents growth. Douglas explains that until you accept full responsibility for your actions, decisions, results, you will continue repeating the same mistakes. The key shift is realizing that the market does not owe you anything, and your results are solely a reflection of your ability to think in probabilities and follow your plan. All right, I have a funny video. It's kind of old, but it's called "I Blame the Coffee" or whatever. It's something like that. It's like I literally one time like I had a bad trading day and I kind of went on tilt and made some bad decisions, did a bunch of revenge trading, and I blamed the fact that I had like doubled down on coffee and that I was just too anxious and you know my wonderful loving wife just looked at me and was just like, you realize you're blaming like a strange external source for decisions you made today in the market. And I was just like, you're right, 100%. I wanted to find something to blame other than me. Okay, it's a silly example, but it was so true. All right, so we need to learn to take responsibility. Okay, plus when you can recognize that something is a problem with you, right, which is hard to do because we don't want to admit it, but once we do, then we know that we can handle that, right? Like it's like with me, I had an issue being wrong, and actually the first one of the first strategies ever taught to me that was profitable was a like 35 to 40% ish strategy. Like that was the win rate. Very profitable, but I couldn't trade it mentally because I had to lose 60, 70% of the time. And I'm like, I can't do this. There's just too much loss. And it was because I didn't have, I didn't even know at that time that I had an issue with ego in the market. Okay. Anyways, so let's just keep going. Key themes and concepts. The illusion of market control. Many traders believe that they can control and predict the market, but the truth is the market is unpredictable and indifferent. A lot of the books I've read, they have this one story where, this famous like technical analysis guy gets brought in and he is teaching like this guy who was so famous for being a floor trader. And then the technical analysis, back when technical analysis was new, and he's starting to teach him, and he's like, check this out, liquidity, we got highs and lows, and we got this and that, and he's like, and then watch the market. Look, it's coming down, it's going to hit this level, we're going to see a reaction, and there's a high probability or whatever that it's actually, he said in that he said it's going to reverse. And so the guy, the TA guy was like, all right, check it out. Here it goes. And so the market drops. And the guy picks up his phone and goes, hey, yeah, can you go ahead and sell 10,000 cons on, I think it was soybean? Yeah, soybean. Okay, thanks. It hits that level. The market just blows through that level, doesn't even turn around and just keeps dumping. And then the TA guy's like, and he goes, I'm one of thousands and thousands of people who can make that call. He goes, don't ever think you can predict the market. Now, that was a hard lesson, right? But he's right. Okay. So at any point in time, just remember we are reacting to a market that is unpredictable with an edge that has a predictability of being profitable in the long run. Okay. All right. So thinking that you can force a win sets you up for disappointment, frustration, and revenge trading. And what I mean by that, and I've heard this many times, how many confluences do I need to be profitable? How many confluences do I need to ensure a winning trade? I have never seen that. Okay. The blame game. New traders often blame external factors, bad news, brokers, manipulation when a trade fails. Just take extreme ownership and be like, oh, okay, cool. Hey, that was my system. I executed it. I didn't respond emotionally. I did what I was supposed to do and it lost. So what? I'm moving on. No big deal, right? What gets you is when you're like, oh no, it failed. It was the news. It was this. It was that. If Trump tweeted or didn't tweet, it would have worked. And, you know, and that does happen, right? But that's, you need to understand that that is just a part of this unpredictable market. Like that guy said, hey, sell 10,000 cons. There's thousands and thousands, probably tens of thousands of people that can make that call. So we can never predict what it's going to do. Okay. Um, and don't blame external things. Just take full responsibility. All right. All right. The mindset keeps you in a cycle of errors because you never address your own decision making. That was me for a while, right? I want to blame everything else. Professional traders never blame the market. They blame their own execution. All right. I've literally gotten wicked out and been like, oh, I didn't check forex.com like I was supposed to, and there was a red folder I didn't know about. My bad. That was my fault. I should have known. I know the market's going to be volatile during a red folder announcement. I should be prepared for it. It should be a part of my plan. If I want to trade during a red folder, which a lot of times I do, I need to be prepared for a wick or something that's going to bump me out, right? It needs to be a part of my plan. The turning point in personal responsibility. Success begins when you accept every decision to enter, manage, and exit a trade is 100% yours. I said it, I don't remember if it was video one or two, but a professional, big money, smart money, whatever, right? Like professional trading company, right? The ones that we're trying to follow, those guys, they have an entire like team set up for day trading. When you're doing this at home on a prop firm or a personal account, guess who the entire team is? You, me. Okay, I don't have someone over me saying, dude, don't do that. Dude, you can't risk that much. I have no rules. I have to follow my own rules. Okay. So taking responsibility means accepting that losses are a part of the game and not a personal failure. Okay. All right. I know in the past like videos I keep saying this, so let's, and it's not just me saying it. Tom Hogard, Jared Tendler, Mark Douglas, all these other people, right? Losses are part of the game, not a personal failure. Don't take it that way. You can't control the market, but you can control your actions. You can control your risk management. You can control emotional responses. Focus on the things you can control, not the things you can't. All right. You'll never find a golden strategy that doesn't lose. Okay. All right. Fear and responsibility. Fear often comes from not taking full ownership of your trading plan. All right. So when you're confused and you're uncertain about what's going to happen and you're blaming all of these mystic external forces that don't exist, you're not really taking ownership of your own trading plan and your own decisions. You're looking for something else to carry the responsibility of the loss. Just take the responsibility, take the ego hit. Just go ahead and do it. It's not going to hurt you in the long run, it's going to help you. And I am speaking into a mirror. Okay, I have to tell myself this. Like, for serious, I have to tell myself this. All right. So, like it says, the victim versus pro mindset. Victims feel like the market is against them. I've had people been like, man, they were after my stops. And I'm like, aren't you on a prop firm? Yeah, well, that's a virtual account. The market makers don't see you, right? And they're like, well, yeah, okay. So don't take it personal. They're not after you. All right. If you want to feel that, go take $10 million and then go trade in the live market for real with a real broker. Yeah. Then maybe take that personally. Okay. Uh, I've never felt that. I've never traded that kind of money. I did trade some low cap coins, some crypto, and I was able to kind of move the market a little bit with some manipulation, with some high leverage stuff, and some money. Sure, okay, been there, done that. Um, Felt it, went to the dollar. Like I tested it and played around with it, but you know, still, I need to take responsibility for that because I'm entering a low cap market, right? And if I'm going to be the one of the biggest players in there messing around, that's like a lot of people at penny stock maybe. Um, and I'm throwing like a ton of money at this. I may have the biggest stop loss. So guess where they're going to go? All right. So victims feel that the market is against them. It's not. Okay. Pros see the market as neutral and they focus on adopting their own behavior to succeed. All right. So focus on the things that you can control. All right. So let's just come back just a little bit real quick. Okay. You can't control the market, but you can control your actions. You can control your risk management. You can control your emotional responses. That's what you can control. So focus on that. Practical lessons from chapter 3. All right. So stop blaming the market for real. Okay. No one trade defines you, and the market isn't wrong. You just misjudge the probabilities. Okay. Even that, like, I don't know about the wording on that one, to be honest with you, because, like for me, I close like 50-50, 40-60, 60% wins. I close somewhere in there. Okay. So I'm going to lose. Uh, 40 to 50% of the time, I'm going to lose. All right. So I need to accept that. Right. And as long as I followed my strategy and I followed my rules, cool. It's just one of the losses. So what? All right. Own your decisions. Every entry, stop loss, target is your choice. If it fails, it's feedback, not punishment. Okay. A lot of people take this stuff so personal. All right. Um, but just own your decisions. If you decided to FOMO, just own it and be like, man, I did FOMO. Why did I FOMO? Because I took a loss because I felt like I was so invested in this one trade. I thought I was going to win. Oh, I was over leveraged. So when I lost, it hurt so bad, you know? Like that's your feedback, right? It's not a punishment, it's your feedback. It's a time for you to reflect. Build confidence through discipline. Responsibility creates a sense of control over your process even when you lose. Okay? So control what you can, like we talked about earlier, right? Failure is a teacher, not a threat. All right. You can't, just if you did everything right, then you did everything right. You just know probabilistically, I can't even say that word right, but probabilistically, you know that you're going to take some losses. So if you did everything right, so what? You took an L. Move on. Who cares? Like seriously. If you did everything correct, then you know that you didn't FOMO and you didn't do things emotionally and you did everything right and you took an L, great. Move on. Give yourself a pat on the back. You did what is right. All right. Reflection questions. Do I blame the market? Okay. A lot of times I ask people in the one-on-ones and stuff, um, do you talk to the market? Do you plead with the market? You know, like I think we've all done that. All right. So do you blame the market or manipulation for your losses? I was just too wiki today, or there was news, or this or that. Just no, man, just take it. If it was your strategy and you took it and you lost, so what, right? Am I fully responsible for each trade I take, including the risk and execution? Or do you find something else to blame? All right. So ask yourself these questions. What would happen if I traded every trade as feedback rather than success or failure? Okay. The feedback you're looking for is your behavior emotionally. Okay. If you trade your strategy to a T and you lose, in my opinion, there is no feedback. There'll be feedback over time. Over 50 trades, you're going to look back and go, what's my win rate and how much money did I win or lose for my strategy? Okay. But not like, how could I have made this loss a win? Like, and what could I have tweaked in my strategy? Like I think there's a danger doing that because people start to do it every single trade and they're making changes to their strategy every single trade. And then they never end up with a strategy that they can trust and execute over and over and over and over and over again, right? All right. How would my trading change if I saw losses as a cost of doing business instead of something to avoid? Okay. Like I said, I have to be prepared to lose 40 to 50% of the time. Okay. I have to be willing to lose 4 out of 10, 5 out of 10 on average. That's just the cost of my strategy. That's profitable. Okay. So, how would that change your trading if you could do that? Action steps and exercises. Okay. Responsibility journal. For the next 10 trades, write, I am fully responsible for this trade and its outcome before entering. Everything should be defined. A lot of times, my risk to reward is calculated before I even enter a trade. Actually, like all the time, because I need to know: am I going to enter? No, it's a risk $100 to make $110. Nah, nah. I want to risk 100 to make 220, 250, 200, 300. Something like that. That's what I want. Okay. All right. After a trade, reflect. Did I follow my rules? Did I accept the results, win or loss? I try to visualize that ahead of time. It really helps me. Okay. Loss neutrality practice. Review your last 5 losing trades. Identify what you learned from each instead of focusing on the money loss. Okay. Was it FOMO? Was it this? Was it that? Or was it just simply your strategy you lost? Okay. Most of the time, people find a pretty good strategy. They win a few and they're like, yeah, got this golden strategy in the bag. And then they hit a loss streak and they're like, garbage. Strategy's garbage. I'm going to go find a new one. But if you just kept going, you would have made money. Right? So that's why you got to start doing this journaling and stuff. I'm telling you, it'll change it. It'll change it for you. Okay. Trading affirmations. Repeat daily. I control my process, not the market. Losses are a part of the distribution of probabilities. Go to winweight.com, type in what you think your win strategy is. I would lean a little bit more like if you're like, oh, I got a 68.8% win rate. Okay, so pull it down to 60 to give yourself some personal, like FOMOs and stuff that you shouldn't do because that happens, right? I mean, even some of the best traders do make mistakes. Usually, the better you get, the less you do make, which is better. Um, and then from there, you can run the probability on there, and then you can scroll down and it has like fake simulated trades, and you can see like, oh, dude, I would have taken 9 losses right here just in this group. But then maybe there's 11 wins somewhere. And I made a video on this, and sometimes like when you hit those 11 wins in a row, you have to be careful that you don't become overconfident, right? And you just keep playing your strategy. Those are usually some pretty big payouts. That's when it pays off. There you go. All right. So let's keep going. All right. Here's the takeaway quote: the market owes you nothing. The sooner you accept total responsibility for your actions, the sooner you will begin to experience consistency. All right. Jocko. I can't remember his last name. Jocko, Extreme Ownership. Go check it out. Okay. Own all of your decisions, all of your trades, all of your mistakes. Learn from them, journal them, and figure out where your flaws are. Mine are, FOMO. I feel, but it's not like a thing. Okay, being wrong and revenge trading. Those are my things. I don't like being wrong. I don't know why I carry an ego into the market, but I do. It totally bruises my self esteem and ego when I'm wrong. But I got to let my strategy play out. I got to learn to be wrong. Okay. And the more, actually, the lower I've allowed my strategy win rate to go, the more money I make. Okay. And that's because of the way my R&R plays out. But I had to learn to allow that to happen because I used to strive and like reach for a high win rate. And I got it. There was times I closed in like, 80% range pretty consistently. But I make more now losing more trades because my R&R is so much higher. So take that for what it is. I know it depends on the strategy itself. But anyway, I hope this video has been super helpful. If you guys would just go ahead and do that whole drop like, subscribe, all that kind of stuff. If you like these, I'd appreciate the feedback to know that this is helping people. This helps me a ton. That's actually why I do the one-on-ones. That's why I have a Discord community. That's why I do this stuff on YouTube, because I learn so much by helping people. It's made me a better trader, and I have the years behind me of like such intense failure that, hopefully if I can catch people early enough, I can, curve that a little bit. Maybe they don't have to go through it as intense. Maybe they can learn something ahead of time that saves them from some of the pain that I went through. All right. Anyways, I'll see you guys in the next video.